Okay, so I'm back in the demo here. We had a big plunge here. I got filled on limits. I got stops, everything running here. I rewrote the hotkeys very quickly. I have 5 stop keys. I guess I have 6 stop keys, and I have 4. I have 1 market order, and C1, and I have C2 is set for limits, and C3 is set for limits, and even C4, I think. So it's how do you set up this board determines what kind of trader you're going to be. So if you're going to put in, this is 4, this is a limit. So actually the way this is comprised right now, it's going to be market, limit, limit, limit. You can make it anything you want, and it starts with stops, but I'm running a 10 pip hard stop on every ticket. So if you take a look under the hood to see what, because I don't want to have to manually trade today. It's too ruckus. The minimum bid came out on the euro, and then they smashed it lower. So yeah, you're pretty nimble to jump in on this puppy, but that's why you want the hotkeys, so you can get nimble. Execution-wise, this is a 4-hour script. I think I wrote this in the last one, but I could publish this to the hotkeys, so it's just called hotkey scripts because you can double-click these off a tablet. The drag and drops take a little more thinking, and you can do a better order placement. You could have bought the round handle at on the Eurodollar today at 112 even with a hand-placed round number. These double clicks are going to come in wherever you've predefined the depth. So this is called depth of script preview. Depth of script trading. Here you turn on this one, take off these forward slashes, and you'll activate 3 pips for 4 hours, 3 pips deep. So maybe at night this is a great trade. It's a huge matrix of volatility, so how you go in and out of these markets is critical. Some guys complaining, what if that I'm just making money for the brokers? What if the market drops 50 to 100 pips? Well, just write a script that buys 50 to 100 pips deep. Well, how do you know that's going to be a good trade? You don't. So forget that nonsense of thinking you know what's going to happen, or how it's going to happen, how long it's going to happen. Even if that price is hit on the euro, so you'd be up right now if you bought there. So edit it and compile. Here is 20 pips deep. I know it says 300, but it's because it's 5 decimal broker. Here's the size. This is a 4K. Now, if you keep pulling the trigger there, you're going to start stacking up risks that last for 4 hours. It's pretty huge exposure. It's like an options trade. Options have expirations, so your tickets have you're an options trader, right? You're your own marketplace. You're a derivative of the bigger pool of orders. This is a high risk trade. This is 60 pip hard stop on every ticket. This is C4 key. 4 hours, right? Now, you may never get filled on this ticket, and you'll say, God, I got to write one tighter, and you will, and then you'll blow out that stop. Right? I need to figure out, well, how much am I expecting? This last stop here is at 50, right? So it's going to be markets coming down in your buy limits. You get to 50 pips, you never hit 60, it comes sweeping back out. And you're cashing out here, you're going to risk 10 pips to make 20. You're getting it 50 pips deep, you're going to cash out 30 pips deep, and you have a 10 pip stop. It's double your money on the tail of that. Now you can make this soft stop 650, 600, 550, 500. This way, you're almost about to get stopped out of this, but when you write the script, you'll realize, well, if I get here with a stop at 50, fuck, might as well just put in this thing at 650, 625, 600, 575, 550, leave yourself a master stop. Now, when you layer in another one, you have another one, right? Your retracement trade, if you're a plunge trader, if you're a unfair value back to the mean, divert to the mean, the fair value. Market goes into shock, market recovers. For the limit trades. Now the stop entry, I'm using my stop entry key, which starts at key 5. So here's a quick view of the current the current modality we're running here today. I'm going to compile this one, and I'm going to go to key number C1, show you what the market order looks like. So you see the market order here, and C means control 1 on my keyboard. You can't have any other kind of control keys and hotkeys. And that's just set like this. Right mouse click, go to hotkey, and set that. Whatever you want that ordered to do, you could make this a hotkey. I have this on another keyboard that has like 128 buttons. It's put the link to it here. It's just nothing but pure grids. So if you want to experiment with like getting in on a node, like in an organized way, when you look at the board, it says in your mind, or you've written a template that says 80 pips deep, right? So you go to a different keyboard to launch just that script. This is the way you can get more organized if you want that, as opposed to seeing that, thinking about it, double clicking it. So once it's taken out of the naming stage, maybe you want to put it on a keyboard so you have an objective view of risk. When you hit that button, you know it's worth X. You don't even think about it. You know you want to buy low, the market's on fire. It could dip 40 pips in a millisecond. You want to get filled on that limit. You want to get out of that thing in a flash. You didn't even see the trade happen. Now you just padded your account for another ricochet, another violent screaming spike move. So the market is highly volatile in the sense that you don't need a lot of money to make a lot of money. So the leverage is expanded, and the volatility is even worse than people think if they're trading at leverage. So you're basically on the hood of your car, but somebody oiled it, right? They put Astroglide on your hood of your car. No seatbelt, let's go for a ride. Are you going to keep going straight? No, we have to take some turns. Oh, okay. This sounds low risk. So I get the risk thing, but in the end, it's going to come down to the market went into shock. Now it's going to recover. Does it recover in a flash? Or was the setup to the shock, the market stalled out? We expect an explosion. So we have a stalled out strategy. Sorry, I got a do-gooder here. He's cutting his lawn. Great. Now I got to go cut my lawn or something. Let's fucking. Oh yeah, there was a commercial on. I hadn't watched TV in so long. There was a commercial on TV that said it had this guy sitting smugly on his lawn, and it said, "Dominate your neighbor's lawn." I thought, with what? You know, just fill in the blank on that one. So, okay, so we're retracing, and this is the hand placed one, which will not hotkey launch. But I have hotkey delete all objects. I have hotkey take all profits. Because I just want to get the fuck out. I'm build a position and dump. Like, I can see where the exit door is. You don't have to tell me the party's over. I'm up $1,000. I'm taking it, right? No questions asked. So I'm really treating this demo like a rag doll, but this is what you're doing here is you're trying to say, well, what if I wrote tighter stops? What if I wrote better scalps? Which button is a scalp key? Can I scalp right now, or do I just wait for my limits to fill? The market's going sideways too long. So the stock market's been open here for 3 minutes now. Now we're either going to get a reversal or a continuation. The British pound ricocheted off the 4-hour top. It plunged through it. It wasn't a precise entry. You gotta get rid of the precision idea. We're just trading baskets, right? We're diversifying the risk over many tickets. We're still going to have patience to let the retrace play out, though, unfortunately. So sometimes people go to the 4-hour to find patience. Here you can see the trap up here, right? So if you played the trap on the wicks, the fake breakout, somebody's just talking to somebody about breakouts. Fake out a breakout. Well, it's definitely the trap out, isn't it? This is the place to start selling with a stop maybe to here, and then you can see the Gartley here. This is what are the rules set for a Gartley entry? You need the X to the A to the B. Right? The triangle doesn't look the way you want it to, but the entry is the same. You have this level, you have this level, here's the trap. Right? The only reason these people are to make money on Gartleys is because they're getting it at the edge with hopefully, the ultimate Gartley in my mind is, the tighter, right? Tighter down here. The idea that your entries here, your stops on the bat tail or something, and this is, you start saying, I want to start buying here, not at one price, all the way down into here with a stop. So your master stop goes below the Gartley, right? You don't know when this Gartley is going to complete. Your Gartley scanner may have just picked the best one, and it's never going to... The Gartley scanner keeps rewriting because it finds new lows, right? Let's not buy a fucking $1,000 Gartley scanner, for God's sakes, people. If you can't see the mechanics of what a Gartley pattern looks like, here's a Gartley trade right here. This will streamline it for you. Takes all of the what do they call it? Ambiguity out. This exists. This exists. You put your buy limit in here. Gartley is automatically proven to be there. Right? This is the A to B, the X to the C. Right? You don't need two triangles to the left of you. Two pastel. Maybe you do. But it's all going to come down to this. Where's your stop? Where do you start buying? Where do you take profits? Zoom out. This is depth of market, okay? You want to see depth of market? I'm still pissed off about this bozo. Depth your own market. Look at, I'm 1 pip apart here. This is 1 pip because that's what that grid script's written like, right? So let's go see where we're at, right? Look at this entry. How many pips could I have gobbled up from here to here? Now, when you zoom out, you're just going to be astounded that you can't even see that. You're like, huh? Yeah, there's people trading down on that level. Think about it. Think about it. What's the pip window here? Would you start buying here all the way to here? Buy standard lots all the way down with the stop. Now you say, whoa, but that stop's so far. Yeah, no shit, right? So why not just pick a risk ratio? But so here's my double click answer. So if this was on another system here, 10 pips, right? In an hour, the deeper they are, the longer they last. Right? If you're going to martingale, you're going to get in at the edge of the market. Martingale systems make tons of money, right? Because what they're doing, they're letting the market fill them the lower it goes. If you get the sizing wrong, say bye-bye to that account. So there's all sorts of caveats to everything. There is no such thing as a car that's good. All-terrain vehicle, a highway is I'm gonna blow your doors off. If you're in a high weight of gravity car, there's no getting away around that. I'm just gonna blow your doors off on the highway. So, this is the sad fact of life is that it's work to make money. So we're looking for the retracement. Now, the scalpers have already had their scalp outs on the British pound and the, I don't even have to go to the 5-minute chart. You just look at the clock and, you're on the 4-hour chart and you're like, oh yeah, I think the scalpers are taking their funds because look, we could just keep going down. So every hour, the trend is this. 1 period moving average. This is as tight as it gets. There's no crossover. It's going down. Don't be in denial. Now, you could buy here at the market. Here comes a doji. It's 4-hour doji. Are we going to wait? No, we're just going to buy at the market. One little position because we think it's going up. Then we leave open the opportunity in our brain because we have all these fucking scripts that we can say, you know what? I'm going to put another strategy in. Maybe I'm wrong here. I don't know. Looks like a double bottom. It could be the beginning of the trend. This could be it. We could go up for the next 3 weeks right off this. I mean, if it closes higher, then I could draw my first trend line in. Right? For the bears, what was their trend line to break on close? Not on wicks, but on close, on the clock, right? Coming right up here. Look at it. Overextension. Right into that. You're selling. What's the trend line to break right now? On the 4-hour, without going to another time frame, it's right here. Right? There's your Gartley, okay? So you can see triangles all over. It's like, right? You've got a hammer, everything looks like a nail. But what happens if the market drops down into here? Are we going to let them stop us out? Maybe it is still going down. We're going to pick up a bunch of orders down beneath that, like this, and hit the double click on, say, 10 pips in an hour, right? Let me delete this. Oh, Jesus. I think I got the wrong key there. Oh, can't delete that. Oh, I'm on the other chart, sorry. Yeah, I'm on so many charts here. I just lost track of what was that. Anyways, because it rotates when you delete objects. Here we are. When you delete objects, it goes to the next thing. I think I crashed it because it was a script running. But we're just going to buy if it goes down. We don't know if it's going to keep going down, but we don't care. We're going to always buy low, sell high. So it's hard to think about staying in buy mode all day and getting stopped out, right? So this is where the deciding whether you're going to let them stop you out and it goes flat, now you've freed up margins. So the other option is that you just treat the whole account as a stop and don't trade with stops. Or you put the stops so wide that you still blow up the account because the stops are too wide. So I understand the idea that what are you going to do if the market keeps dropping? The same thing could be said, what are you going to do if it doesn't? Should you buy at the market and say, oh boy, I'm getting signal here, oversold? Okay, maybe, but the guy that got in at the psycho level, you may never see that level because the confirmation traders are going to get in at a higher price, right? So the idea that you just got that amazing price. Now, this is the problem. If you're going to hold that, is that on a different broker, that same trade, that same concept run, like you're trading the British pound over 5 brokers, right? Imagine one instrument, 5 brokers, right? Invert the thing that everybody's doing. Why are people losing? Because they don't have a trade plan for the time frame they're on. So some guy's asking about Elliott wave. Yeah, sure. But which wave do you want to trade? Wave 3 typically, right? But what's wrong with wave 2 if you're in big? Right? If you can see wave 2 coming, but it's always after the fact. So uncertainty, you have to live with uncertainty if you're a trader, of not knowing what's going to happen. And once that's okay, you know, I realize that people get on boats with life preservers and shit. Well, we can't do that as traders. We just do not know how psychotic the volatility is going to get. And at first it's scary because you're in a position and your equities, you're getting smashed or you're winning. And if you're winning, you're euphoric. And as soon as you're euphoric, you might as well just be, you're blinded by euphoria, just like when the pain of losing blinds you to, it takes you down another psychological rabbit hole. So this thing about the patience too would be patience to hold the loss till it becomes a winner, like not panicking and getting out. So you would only panic and jump it if you thought, geez, this is just, I can't handle this pain of the equity swing. So getting the equity swing reduced is like scalping around it, having a realistic target on one hotkey, and the other one could be a greedy target. So the spectrum of hotkeys on your stop entries, and I'm just saying, when I say stop entry, for me, they're literally market orders. I mean, it's like I'm getting in 5 pips. If it goes up 5 pips, I'm in. So it's kind of ridiculous to even call them stop entries. I would never place a stop at the high of the day because that's ridiculous, right? I mean, you've already missed the move. Apparently, if you're at the high of the day, you missed the low somewhere. So that's hard to admit. So people will jump in and, hey, but there's nothing wrong with trading at the market. Like if you had the discipline to only pull the trigger on down bars, imagine you only bought down bars with a 20 pip stop across like 5 currencies. Now this is something any beginner could do on a demo, and they'd be like, hey, it's crazy, it works. Sometimes I get stopped out, and if I take every signal, right, every down bar, every red bar is a buy at the market at the end of the hour. How many down bars are there? There's not many down bars. And if they're really down a certain amount of pips, you just put in a wider stop on that one, but the same size, wider stop. This way you build a position. You can take the punishment of a swing, but now you've set your system up to swing traders, but you have a couple of keys in there that are scalp orientated, where you're going to buy in a stop. You're going to risk 30 pips or 20 pips to make 10 pips. But you know that key, when you hit that key, that you better be right about that trade. You basically kind of market orders too like that, right? So if you have the market's going sideways for a long time in Asia, you can build a stop bracket. You can start to bracket the market and run your breakout strategy, right? Anytime the market pauses, you could say, I'll buy at the market every time it's down hard with a wide stop, and every time it's down a little bit with I'll just put a tight stop every time it's drifting down a little bit. Maybe getting stopped out on a couple of those, but you're still holding that original when the market plummeted. And now you got to think about, I really want to buy because you're a buyer, and you're counting on it going up, or you would never make money. Nobody would buy thinking they couldn't sell it at higher prices. So you accept that risk and you put limits in that last a certain amount of time. And at the end of the day, maybe you just got stopped out of everything, or maybe you blew up the account, what have you. But at that point, you start to say, well, I have to front run. I have to go in front of where I know I'll buy anyways. If I see it down, why would I buy now when I'll buy it later if it dropped anyways? Because you're a buyer. Like, buyers don't think. You shouldn't think, well, it's not going to go lower. Sellers the same thing, right? If you're selling, you got to believe it still could keep going up. You could be wrong. So what do you do about that? You're going to have to place those limits out there to take care of that part of your brain that is trying to make money. Because the idea that you think right here and now is the best place to get in really big for a scalp, unless you got that pre-programmed on the keyboard and donate that hotkey to that one trade plan. So this buy at the market, you could buy here, I'm buying 4K, but I'm scalping out, right? And this is the one I wrote for that guy with the 64 pip target, right? So if I do that, I'll buy at the market like that right now. And maybe I'll be right today. Actually, you could run that script today. I should tell the guy. Okay, and the dollar yen's coming up, so I'm going to sell the dollar yen as it gets above 105.50. I don't know if these orders are still pending here. I'm selling up into this, so I could have a problem here. But I'm selling right up into this this void here. I probably shouldn't do it, but I want to see what happens. This is selling just above here like crazy, right? All the way up. I'm just going to load the kitchen sink up here. Put it in the kitchen sink, as they say. That's a classic. The kitchen sink, apparently that was the heaviest thing in the room back then, and people were like, we put the kitchen sink on that. Oh, wow. Still load the wagon. Okay, it looks like we're going to go up on this. Dollar yen's trying to get back to the floor, so we're going to sell into the floor on limits. 4 hour. And then let's take a look at the euro. I was talking to somebody about this. See, I bought it on limits here. So see, here's a fill. See, we retested this low again. I was just talking to somebody about this. See, I bought that. But that was a 1 hour script, I think. I can't tell if I got. See, on that wick would have been a perfect fill, and I don't know. This one I only grabbed the top order, I think. It's too late to chase that, so what I'll do is I'll come in with limits like this that are almost market orders. This is the euro to the yen. So this is right now. This is key number. This is buying 2 pips deep. The spread is under a pip. This is going to buy here, and this is going to be the big 4 hour. Sleeper sell. You go to sleep, you put a sell in, you sleep. Then that's the 2 hour. This is this, and I'm not going to chase it because I'm in the euro. Right, I'm in the euro. It's over here. So this one is the 4 hour, and I'm done buying. Now I wait for the retrace if it happens. I'm done buying for the day on the. So if you pull the trigger here at the market. 4 hours down on the pound, you just right now they would have stopped you out because we went lower after that. This is why you need scalps built into this, so you can see the history of my drops. Here's the every 15 minutes. See, I dropped over every 5 minutes. I was buying in here, right? Because it was low. and I put in stops. So you can, if you don't delete these arrows, you can see this is like your trade journal, so to speak, where you can see what you did to try to make it better, and what you did right and what you did wrong. But I know that these are limits, and I know the ones that are tight or stops is mostly limits though. Hand plays, drops, I'd say on this stuff, and if I opened up the comments, I could see which ones. See, now I'm not big enough. I was in really big before. I want to get in bigger now, so I'm just going to overpay on this euro. We're on 10 pip stops here. Just really buy at the market. As soon as it goes up, now I got a 55. I got a 50 pip take profit on my last stop key. So this is what I'm running here. Is I got the let's see this. So I got 6 stops. There's some news coming out up there. Okay, jeez, who cares? If I had to think about what this news means, I'd just be already back in the institution. They would have reinstitutionalized me. $1.30 on the pound. So I'm going to try to get out $1.30 on the pound here. I'm going to move up all my targets. You can also just get into these trades and move your targets. Now you would be breaking from your plan your trade your plan scenario if you're trying to see if some particular algorithmic approaches or matrix approaches playing out the way you'll find out when you look at the platform, and you'll see if it's got a color behind the take profit. It means it got out where you pre-described it. Not to say you can't drag the orders around the screen and manually manually define your exit. But so we're getting into more. I just picked up another 10K here or something. But these are really just, the reason I have these is because I want to get in with different take profits on each key. So if you go to 5 and take a look at the stops here. So I'm getting in when it goes up, not even a pip. Right? It gets in pretty big, actually. Got to take that into account. But this is a scalp break even, right? So you're risking $6 to make $6 there or something. Right? So the you can make this a little more like, hey, confirmation, I'm going to get in 10 pips. 1 pip above looks like this. So I'm going to program this thing and post it. I just call it hotkeys. Now, this makes sense. It does. I've gone off the path there. So this is going to be risk 10 pips to make 10 pips. And you're going to get in 1 pip above current price the moment you drop it, depending on where your broker spreads it. So compile that, and then go to key number 6. This is where you get another 10 pip stop. It's going to get in 1 pip above. I'm going to go for double your money, but maybe that's too greedy. So maybe you want to get out you want to get out 5 pip increments. So in your mind's eye, you'll see an angle at 45 degrees, every take profit. Compile that, go to 7 key. All right, this is going to be 200 to keep on the tangent of so many pips per. This is a smaller position. So this is actually technically less risk now. You just change the whole, like say it's descending, you're getting it heavy here, scalp 6K. But this is, you probably don't want to get in a stop in individual Ks, unless if you put this, you just need to hit the key again, but I'm trying to do it because there's enough money in the account to I'll be on a demo, on a real account I would never do this, but I'm testing this, hitting it, like I don't want to spend any time trading the demo, so I come over and hit the key, whereas in a real account you would go buy stop, buy limit 1 pip, you build into, you're literally capturing, you're catching a falling knife, but it's coming down in and it's going to bounce a few times, and you're going to, you gotta have that micro bounce script, the scalp. But for just inconvenience, instead of hitting this 6 times because I got to trade my real money, I'm just going to put this. That's why the demos typically blow up, because I tried very hard to test stuff. And it's not like I wasn't making money before I blew it up. So it's not like I didn't accidentally make money or accidentally blow it up. I purposely blew it up, and I purposely made money. I knew it was going to blow up. I'm like, this is too big. And but this is why you need more than one account, in my opinion, for me, because
you're going to lose or blow up. It doesn't matter. When you lose $100, if you blow up $100 account, it's just like putting a $100 stop on a $1 million account. What's the fucking difference, right? Psychologically, it's damaging because you're like, oh, I just blew up my account. Well, that word, right? It just fucks with your head. So I enjoy blowing up demos, honestly. Pretty much when you go around the racetrack there, and then you say, okay, let's just blow the engine up. Let's see what it can take. When it seizes, you say, okay, then you mark the tach on or just blow that number. And so we have to do that to test a demo, to test that strategy in real time. No backtesting allowed. Backtesting is just nothing but false sense of security, positive expectations. I tested it, it should work, therefore. Then you start to trade in that and you find out that, you know what, maybe I trade too big on that setup. It looks so good. So I've done that and I just gave up on setups and stuff and said, well, let the setup come to me. So I put my orders where I think that could be a setup. If it happens, it happens. If it doesn't, it doesn't. I think I could jump into a 15-minute chart and just, or I think I could assess, you know what? Yeah, right here, I think this is the low of the day. Buy a little position with a wide stop. Who couldn't do that? But it's the person that comes back and says, you know what, I still like that trade here. And buys another one on a rule set that says every time it's cheaper, I buy it. Who's overpaying? Why are people overpaying for stuff? And why aren't they trading more? It's too much work to trade small tickets for pennies. I can tell you, that's how you become a millionaire. Learn how to manage a penny. Learn how to manage your $78 stop, or whatever you're running. Okay, look, I'm going to retrace here. I'm going to let this go. I'm going to move my take profits on my real money. Another thing is I don't want to come to this account. I have to micromanage it. Now, this ticket is set at 15 minutes. This one's set at 15 minutes. Now, maybe you want to set this longer, because when you go to Asia, you're going to maybe set this to 2 hours. As soon as you do that, it changes everything. Everything. And maybe you want to go into a smaller position. All these numbers matter. So the guy's asking me about Elliott Wave. Well, you got to know when the end of wave 4 is. The easy way to trade Elliott Wave is you're either going to trade in an uptrend, you want to trade 3 or 5, right? I like to trade in Elliott Wave, there's wave 0. So there's 0, there's 1, 2 pullback, 3 the big wave, 4 pullback, triangle, drift, big wave 5. Get it in there, reversal, write it down. And maybe it goes into an ABC correction. But there's an ABC correction micro built into every even wave. The odd waves are up waves. So the divergence happens at 0 point on Elliott Wave. And so you can trade that because you can see it coming. It's like, yeah, it's done. It's tanked. It's at the end of wave 5 or the end of wave C on the downside. You get in. You scalp a little. Well, if you're a real Elliottician, you know there's a 2 wave coming. So you got to dump that. You got to dump the early bird gets the worm, the second mouse gets the cheese. The cheese is wave 3. So on the line chart, closing prices, you can see Elliott Wave very clearly because if you see a big wave, you know that's CR3. If you saw the market screen, so if you're buying, if you're selling the end of wave 3 in an uptrend, you know it's going to take a long time to make profits on that, to drift down and create wave 4. Or maybe it does, you get the scalp, right? Because the triangle's constructed of a volatility that diminishes. So there was a scalp available to you, you just didn't take it, you didn't have that ticket ready. So it's, if you have a blend of scalps and swings, you know when it's appropriate to dive in to take on, like when they do these, like the power goes out and people are looting. You're a looter for a little bit, so it's kind of a dirty scalping. It's like, oh, well, you're just take a chunk. And then, the place shut off, everybody comes down, the store goes back business as usual. This is when the normal customers come back, the people with the moving averages and all that shit, right? They come back to the scene of the crime and they're, oh, it's back business as usual until a big fucking ferocious spike comes along. And, it's what they call it, the breaking of the glass. And so, that's some German phrase starts with a K. And so that happens. And then, so there's the window for people to get in when the market's quieted down. And you'll see that over a big move. And it's a Diane's go looking. Coming up in my cell, okay, here's a moment of truth. So, let's take a demo. Now, you can set these keys right now. They're set like 10 pip stop, 15-minute scripts. I think everything's on 15s. No, 2 hours here. So this is complete. We get the key 8, it's set to this, right? You gotta look at all these numbers before you build your trade plan. This is going to buy if it breaks up about 3 pips, very lightly, wide stop, wide take profit, small position, longer lasting. Because if you're a swing trader, you know you have to take some punishment. How much punishment per hour are you willing to take? So you're defining your risk up front here. It's forcing you to think about trading here and not about patterns and stuff. And what realistically you could expect the market to do. Okay, I'm going to film on these. Let's see what happens. So you have to look under the hood there and see what everything's going on before you get too giddy about Here, I'm going to come into my sell limits on the 4-hour yen. So let's see what kind of traction we can get out of this thing. Now, I'm probably taking quite a bit of margin here. I'm down about $2,000. So I'm up and down. And that's because I'm running all my scripts. That's because I just don't care. I've never traded real money like this. Just I guess I should have put a disclaimer. What we need is test out the concept, and if I don't blow the account out by some miracle, then I guess the news just came out. So 10 o'clock, top of the hour, here comes all the people buying into. They're going to get stop hunted here on the daily. Which is a daily. So they're going to trim these wicks. We're going to sell up to the floor. There, monster grids. So our goal here is to blow up the account, and that's actually the goal. So this way you embrace the risk. You just accept all risk up front. You're putting a monster. Here, let's just buy really densely to try to make $24 up here at the top. So that'd be 24, right? 48, $96. So that's the cash out dollars here. It's the last number here is $12, so makes 36. 20 pip stop at the 60 pip profit. Then smash down to the euro, back to 112. Go figure. So the modes are constantly retesting. Very difficult to look at this. So we'll buy more. We'll buy below this wick, fresh lows, we'll buy all this new price down here. So predefined. Here's break-evens, 4-pip range, 5K. So this is a completely different style of trading here. I don't have double clicks for this. I guess I do have a couple, but this one I can see the take profits. And the double clicks, unless you wrote it right into the title of what it's supposed to do. Okay. Looks like the big bad bear is dying out here. All right, retrace. So let's buy the stops. So the keys I just wrote here were oops, yikes. Let me put the greedy targets in. We'll buy stops. So I'm just going to load up here and buy stops or just market orders really 1 pip above. Right? Let's buy a ton of euro. There's some more euro to buy. Oops. This could keep taking some buy limits. And then just place limits at new lows all the way down. So here you're just going to come in like this. Put a pile of buy limits down here in case we smash and stop out when we picked up on these tickets. Okay, euro buy stops. We'll just market orders. Bunch of buy limits. And I think there's one more piece of news coming out at 10:30.
News you can use. Okay, we got the Bank of Canada has some low impact news. That looks like it. Let's go look at the Canadian dollar. It's trapped. It's trapped in a range. I never filled my sells. I think dollar is doomed against CAD. I think this is it. Lights out. It's a daily. Sellers are selling up here at resistance. Okay. British pound. British pound 4-hour. Okay, let's take a looky poo. Let's go around all these markets. Dollar yen's on a tear. Okay, British pound. We bought that low right on this wick. All right, so here's your Gartley entry. All right, this is your X to your A to your B. Your stop would be down there. And let's go to the euro dollar. See, there's a Gartley right there. Your stop's down here. You're buying new lows. Wow. Treat that like a rag doll. You just can't get her down to that 13. Just won't have it. So you wanted to get in early here on this trend line break, right? Real early on that. Buying into this. Here's the top that became a bottom that got the whole party started. You could still fall into that. but we're just buying the dip back into this. So we would just, on the daily, it looks like this. If you have a day job, you just look at this and you go, oh yeah, who's not buying this crush down, right? Like who's not buying all the way down? So you can just let those orders rewrite the timestamp to make them last all day. You're up on the scalp here, probably getting out of something. You got to figure, right? It's already on, man. It's pissed off. They sold it off too hard. Okay, the news is coming out. Are these guys going to come out Bank of Canada in about 20 minutes? See what happens. Half-hour trade. If you're a half-hour trader and you're trading at the market, you had to keep buying in this whole pullback here. And I bought on some more limits, and I got in on. I got stops. I think still pending above me. I'm just gonna let those go. So it really depends what time frame you're on for your strategy of buy every half hour it's down. Here you might have got a little hurt, but look how they at the end of there's no recognition of this. This is the minimum bid coming out on the Eurodollar this morning, and then we just kind of the breakout traders actually your breakout bot scalped a few bucks here, right? Bracketed that 30-minute, but we're always buying the buy at the market. I'm a half hours up. So coming out news here, natural gas. And this is kind of like a lock-in trade here because if people are pulling the trigger on natural gas numbers, because that's a huge, even though it's a low-impact news thing, it's still the biggest cash crop the United States has is natural gas. We've got that like these guys got crude oil. And everybody's going to this green energy thing, so this stuff with crude oil could come all the way back to $20. Wouldn't that be amazing? Then you have these people going out and buying, probably instead of a Hummer, they're just going to buy a fucking tank, right? You'll hear a guy come down the street here with his tracks, chipping up the. They'll come out with rubber tracks, of course, right? You know? That'll be nice. Forget the Hummer. It's just going to be rubber tracked Tiger tanks. Okay, news in about 30 seconds here, and I loaded the wagon as this was coming down on buy stops and limits. And look at the daily. You're not even going to believe it's the same currency. So here we're coming back, retesting this low, chopped out all these wicks. You could have a day job and you could place orders on all those daily wicks, and you could have just scalped out of that thing right now. News right now. Here we go. So the news is out, and it's very bad for the dollar, right? But we knew that, right? Because they've been bidding the dollar up all morning. What's the chances that it's going to reverse? Go figure. Real brain teaser, right? So it's just, stuff goes up, goes down. Okay, so I just got out of something. See, I had that scalp button. So I'm going to post this the way it is now. It doesn't mean you're going to make money, because you still got to babysit the stop entries. And the limit orders, you could, right? Some of this was hand dropped. There's no special formula. It's just what kind of trader do you see yourself as? Are you a scalper? Are you a swing trader? You design the trade plan. In other words, if you want to risk 20 pips to make 60 pips, this is the checklist. Checklist looks like this. Do I have an order? Do I have a way to make 60 pips and risk 20? So you write that trade plan. Now you look for a place to plug that in the market. Is it going to launch at the market? Is it going to launch on a stop? Is it going to be an order placement really deep to risk 20 to make 60? So after you write your risk plan, which is I want risk per ticket, that's checklist, per ticket risk, then you decide then there's 3 styles of entry. So you have risk, what style of entry, and then with market order, you don't have to worry about order placement. It's right there instantaneously. But then it comes down to when. So the market orders qualifier is when, right? When do I do it? So this would be the discipline. So if you're impulsive trader, you're just going to keep pulling that button, and it might blow up the account. The stop entry is how close to the market is the stop. Same thing with the limit. Now the limit could be close to the market, but then that's going to be, I think that's just going to be my, I'm going to call that, in other words, you have to call out the stop on that. everything's got a 10 pip stop. The 80 pip one, who cares, right? If you're going to buy at the market with a 20 pip stop to make 80 pips, what's the difference between that and buying 5 pips deep at a limit with a 10 pip stop to make, you know? But I'm always thinking that I want to put my buy limit starting maybe 10 pips deep, because if I've got a 5 pip stop on my market order and it goes flat and I pick up the next rung on the smash down, since you don't know where the market's going, I'm presupposing nobody knows where the market's going, and then you're going to pick up that ticket. Then you can assess, you know, when the ATRs die out, maybe it's time to get in with some hedges and stops and all that. But you have to figure, if you just take one ticket, you'll see how hard it is to think about where can I get in the market with a 20. You're not back testing, you're back fitting the stop to the entry of the grid that you're on, the instrument you're on. If you're on a high volatility instrument, it may be a 50 pip stop to make 50 pips. You set all those traps, you go to work, you come home, there's money, there's not. You have to think about prices that may not even be on the chart yet, so you're putting orders way out into Disneyland. But as long as you accept the risk, because you've written the script, you know the actual dollar risk, and if you place all those things, I don't know how organized you are, you place all those things, and you, at the end of the day, you'd say, well, I'm risking $50 across 50 tickets, and I'm just going to let it go. So, you know, whatever the math is, and then you don't have any skin in the game mentally, and you just let it unfold. So discipline would be not intervening or not saying, oh, and add to that. But letting the market come to you means that you're getting a price that you don't have to be there for. So it's very important. It's an execution. It's a pre-execution, if it fails, because you don't have to be there and babysit. So that's the advantage that people that have day jobs have, is that they can place mind-boggling orders and just come home and go, wow, you know. And if there's a scalp built into that trade plan, then even if it kicks you out of the other fills, you will still make a profit. So people say they move the stop to break even. Well, what's the difference between that and having a scalp built into that bank so that it scalps out, and then it's as if you're going to be at break even, because the original stops on the swing trade now won't become, when you get stopped out of those, you've already padded the account on a scalp. You could see that it was going to be a battle there at that price. You know where there's going to be a fight, right? It's going to be the back alley. It's going to be way out on the outskirts of town. That's what they kill people and they throw them way outside of town. It's hard to get rid of somebody in the city, because where are you going to put them in a dumpster? So the unfair value, at unfair value places at the edge of the market here, you would have already had a scalp built into this of some degree when you got in at these fresh lows. It's not just a one trade thing, like I'm going to get in here and just hold it. No, what if it keeps crushing down? Because like it did here, up 2 days ago. But see the tops here, never penetrated up there. So this is the argument for selling on the clock, is it goes up, sell, up, sell, up, sell. You're not always going to get filled here. Here was the ultimate fill, right? This is the genius trade, is that you put your sell in up here, you get filled, and you ride that all the way down. But not at one ticket, right? You had the scalp to here. You had a scalp to here maybe. And now you're so up on the trade on scalps, the rest of the thing can float through the whole day and play out the other scenario, the larger wave. But you do this all up front. And then every day you come to your demo and you just run it. Maybe you do want to imagine there's some hot-looking Gartley on the screen, but it's just not going to help you with money management, which is the first place to start. You're trying to make money. So you have, or you're trying to win a war. How much ammo do we have? How much dry powder do we have? Like, who's going to go into a war without checking their ammo reserves? You'd be nuts, right? High-end guns. Oh, ran out of ammo. Oh, great. Love you. Well, you can be on our team anytime. Well, that's the concept here. I'm not going to go around with a fucking bazooka all day, jousting at windmills with a big fucking ticket. What are you, nuts? Yeah, I'm going to put in fucking scatterbank orders. Yeah, I'm going to pepper my screen with money. So we've got to wait for this to play out. There's supposed to be some election coming. God knows.